Hello, everyone, and welcome to today's panel discussion on OBBBA, the new tax bill. This session is about working families' tax cuts, big changes in store for filing season 2026. This webcast is brought to you by CPA Practice Advisor Magazine and Drake Software. I'm Gail Perry, Editor-in-Chief of CPA Practice Advisor, and I'll be your moderator today. Before we get started, I'd like to explain how continuing education credits work for this webcast. The webcast qualifies for 1 credit of continuing professional education, and also, if you need it, 1 IRS CE credit. If you plan to earn credit for attending this session, you must stay with us for at least 50 minutes. In addition, we will display 4 polling questions during the webcast, and you'll need to record an answer for at least 3 of those questions, as this is our verification that you are still watching. Later today, you'll receive an email from CPA Practice Advisor that contains a link to your CPE certificate, assuming you met the requirements for CPE. Also, if you're needing IRS CE credit, you should have entered your PTIN number when you registered. If you did not, you can enter that number in the Ask a Question box on your screen, along with the name that you use for IRS registration. But if you entered that when you registered, then you don't have to enter it again. Please note that we can give continuing education credit for multiple people watching on the same screen. So if there are others in your office who would like to attend this event at your computer, please have them join you now. And at the end of the event, we'll provide an opportunity for you to send us their email addresses so they too can receive credit. At any time, you can enter any questions you might have in the Ask a Question box provided on your screen, and our speakers will try to get to as many questions as possible during the presentation. Any questions not answered during this live webinar will be addressed by the speakers afterwards via email. The slides for this presentation are available for download by clicking the Event Resources option at the bottom left corner of your screen and then clicking on the PDF file that's displayed. If you logged in early and you don't see the Event Resources option, just click the Refresh Screen option on your screen and that option will pop up for you. Also, we'll be displaying an archived version of this presentation on the CPA Practice Advisor website after the event ends, but note that CPE and CE credit are not available for watching the archived version, only for watching the live version. Okay, today we are joined by John Sapp from Drake Software and Taylor Rodier from Taxwell. I'm going to have them introduce themselves, and then we are ready to begin.
John, do you want to introduce yourself first?
I am more than happy to do that. So my name is John Sapp. I am, Taylor and I both work for the same company, Taxwell, although I'm in the Drake division, and I am Vice President, Brand Ambassador, and most probably see a lot of people that are attending this presentation in some of the training that we do. Really glad to be here today. I'm a CPA, been that way well over 30 years now, 40 years, I don't know how long it's been, and excited to be here with Taylor. So Taylor, you go ahead.
Thanks, John. I am also so happy to be here with you all today. I am not a CPA. I am the Legislative Affairs Manager for Taxwell. So I keep up with what Congress is up to, what bills they're working on, what they're passing, what they're not passing. So I will be here today to sort of add some color to this discussion about the most recently passed reconciliation bill. So
and we might even get into the shutdown and what's going on today and what we can expect. So the best thing about this particular webinar that I don't get in any other webinars that I do, all of the other webinars, all we talk about is tax, right? We're all tax wonks, how to prepare tax return. Taylor brings that experience from the Hill, that legislative perspective, not just what's happening, but why it's happening. And so I'm really excited to always learn something as Taylor goes through legislative aspect of everything. So I'll shut up now, Taylor. You go ahead.
Just a little disclaimer before we get started. Throughout this presentation, you'll hear us refer to the One Big Beautiful Bill Act as OB3 or sometimes OBBBA. However, IRS and Treasury have begun an effort to rebrand the bill as the Working Families Tax Cuts. So you will start seeing that name in the media and elsewhere just want to let you know that that is still the OB3 that we're talking about. It's just going by a different name now, as confusing as that sounds. So we may refer to it as working family tax cuts. You may hear us say OB3. We're all referring to the same thing. We're just trying to keep up with all of the most recent changes. So as John said, we are going to discuss the political context that produced this legislation just a bit. So we feel that that's important to understand the policy objectives and goals of this bill. We will put forth our observations in as much of an unbiased manner as possible, but I just like to give this little disclaimer while we're going over the learning objectives for this session. We want to understand the legislative path, identify implementation challenges, review key tax provisions in the bill, and evaluate the policy and political implications as well. So here is our agenda if you're following along on the PDF version of the presentation. And we will get started talking again about the legislative path. So how did we get to OB3? The process of writing such a massive piece of legislation is far from straightforward. If you tracked the development of this bill at all, you'll know that there were delicate negotiations, contentious exchanges, and political horse trading right up until the very last second to get this bill passed. We saw the 2024 general election produce favorable results for the Republican Party. So President Trump returned to the White House. We have Republican majorities in both the House and the Senate. And the Trump administration and Republican legislators wanted to swiftly enact the president's policy priorities as soon as possible. The best and most efficient way for them to do that was to use the budget reconciliation process. And at its most basic, this is a legislative procedure in Congress that allows certain tax, spending, and debt limit bills to pass the Senate with a simple majority of 51 votes instead of the usual 60 in regular order. So when one party holds a trifecta, as the Republicans currently do, the reconciliation process offers the most straightforward way to pass major pieces of legislation. Reconciliation gave Republicans a way to advance the Trump administration's legislative agenda without having to undergo any bipartisan negotiations or compromises that other legislation usually requires outside of the reconciliation process. So even with these slim majorities that we see, the GOP could still meet the thresholds for passage in both chambers without a single Democratic vote. This
Not
is
one?
sort of not one.
No,
Not one. Not one. So this is just a bit of a timeline, if you will, of the reconciliation process. This is the path that Working Families Tax Cuts, or OB3, took through Congress. Reconciliation always starts with a budget resolution that's passed by both chambers. An identical version has to pass both chambers. And this resolution sets spending and revenue targets for the resulting legislation. Committees then draft and pass legislation to meet those targets. And then each chamber's budget committee combines the committee work into one bill. When OB3, or Working Families Tax Cuts, became law, its path started in the House. So House rules cleared the bill for a floor vote. Speaker Johnson then added a manager's amendment that was needed to appease certain wings of the GOP that were not satisfied with the bill in its current form. So the speaker had to add that amendment to appease those people and other, the SALT caucus, for example. And then the House passed OB3 with a simple majority. Then it moved on to the Senate. Debate and amendments led to a 24-hour vote-a-rama. I don't know if any of you like to watch C-SPAN as much as I do, probably not. But that was a very interesting watch with VP Vance breaking the tie. OB3 passed 51-50 on July 1st. And then the bill returned to the House for final approval, was passed out of there on July 3rd. President Trump signed OB3 into law on July 4th. So we saw Republican leaders have to play a significant role in passing this bill. The first and probably most difficult role that they had to play was to comply with the Byrd rules. So Republican leadership from Speaker Johnson and Senate Majority Leader Thune, all the way down to committee chairs, had to ensure that all legislative measures in the bill would comply with the Byrd rules, which are designed to make sure reconciliation is only used for budget-related measures, so that's spending, revenue, or debt. Under these rules, any measure in the bill can be defined as extraneous and be stricken from the bill. That happens either via a floor challenge or unilaterally by the Senate parliamentarian. So if those provisions don't have a significant budgetary impact, or if the impact is incidental, if they increase the deficit outside of the budget window, or if they're unrelated to the jurisdiction of the committee proposing them, they can all be stricken. And that did happen in the case of this bill. The parliamentarian ruled some Medicaid changes and other things as extraneous, and they were stricken. So in the House, as I said, also, especially the Speaker has to deal with a lot of different factions within the Republican Party. So even with the majority, these factions disagreed and have different priorities and attitudes. The Speaker had to work really hard to find some compromises that would work, because he could only afford to lose 3 or 4 votes. So that's pretty narrow line. And then this is where we saw the fight over state and local tax deductions. So in the Senate, Republicans saw those deductions as wasteful and had little incentive to support them. Blue states usually benefit the most from those deductions, and blue states usually elect Democratic senators. So there was little incentive in the Senate to pass those state and local tax deduction increases, but in the House, there are Republicans from blue states that faced intense pressure to restore those deductions. So that was one of the biggest changes that we saw. And then we also saw Republican leaders try very hard to meet the Trump administration's goals. One of the biggest reasons we underwent the reconciliation process to begin with was to make TCJA permanent, or at least extend as many of those expiring provisions as possible. So all of that had to be done by complying with the reconciliation rules and towing a very narrow line to manage those different factions in the party. And I believe we have our first polling question, so I'll turn it over.
Okay, this is question number 1. What procedural strategy allowed the Working Families Tax Cuts, or the OB3, to pass with a simple majority in the Senate? And the answer options are the filibuster exception clause, the bipartisan budget approval, reconciliation process, or line item veto authority. So choose the answer that you think is right, and then you can click the submit button. If you don't see the question popping up on your screen, you can enter your answer in that ask a question box, and we'll record it there.
Hey, Taylor.
Hey.
I just wanted to make sure that, because we had the question and I said we'd answer it, so I want to make sure that everyone saw that. I think this goes with the polling question, though. The whole purpose of the reconciliation process was to avoid the filibuster, right?
Yes, it's to get around the filibuster, not void it, but to get around it. Yes.
Yeah. So, got it. Just wanted to make sure that was the case.
Okay. Are we good to go ahead and discuss the answer?
Yep, we are. It looks like most of our answers are in, and there's an overwhelming majority, 82%, saying that they think it's letter C, the reconciliation process.
That is correct. That is the process that allows Congress to pass legislation without meeting that 60-vote threshold in the Senate, also known as the filibuster, like John just referred to. So given that, we're all on the same page there. I'll turn it over to John to talk about key tax provisions in the bill.
So I was just sitting here as I was listening to Taylor, who is doing this with a lot of energy, and I feel tired. just thinking about, I graduated college with my bachelor's in 1986. I would say some folks on this call remember the 1986 Tax Reform Act. Even back then, we were having, pigs and pals and 263A and uniform capitalization. And then we saw in the 90s several different major tax packages. And they're always interesting to dive into, and then they're very tough to implement. We're seeing that now. Taylor, I think I've clicked on the screen. Am I controlling that now? Am I at the...
I'll control it for you. Don't worry.
Yeah, either one of you can, whoever clicks wins.
So we have a lot of provisions in this bill, and I'm not telling anybody on this particular webinar anything. And I love the agenda item that just says a high-level overview. So I'm going to talk quickly as we think about things like the tax brackets. Originally were set to revert back to pre-2018 rates and give us a 39.6% top bracket and have all of our brackets adjusted up a little bit for taxpayers. We see that did not happen. And so now beginning 2025 wasn't set to change that much except for inflation adjustments. Now we see after 2025, the TCJA rate reductions are permanent. Some other little nuances in there that we're not going to go into today. For example, the 12 was going to go to 15. Now that's not going to happen. Presents some interesting tax planning opportunities for us. And I think it's worth mentioning the word permanent. I think we've all kind of grown a little numb to that word. And the reason that I find what Taylor talks about extremely interesting is because it all becomes about how do you score this in Congress and how it could get passed within the budgetary constraints and that reconciliation process. And so to get those permanent, which was one of the major, one way that historically I think that legislators have gotten around that permanence or around the budgetary process is to not make things permanent. So there are a lot of things in this that were ingeniously, I should say, or creatively, maybe a better way, put through the process in order to allow them to be permanent. What that means is until a new administration comes in that does not want them to be permanent, they're permanent until we have further notice. So standard deduction, again, effective this year. It was set to go back to $8,800. This year, it's going to be $31,500. Along with that, I think this may be down a little bit. We had a new deduction here for seniors, where anyone who turns 65 during the year is going to get an additional $6,000. That was kind of a compromise for taxability of Social Security income. They gave seniors just an extra $6,000 deduction, and that is effective for 2025. Not really a TCJA extension, but it is something that kind of goes along with the OBBA or whatever we're calling it. Sorry, probably tick people off. Administration that heard me still calling it that. Child tax credit, one of the largest credits that our clients get this time, and has become all part of our W-4 withholding, all part of our tax planning. You'll see within the bill, I think there's 9 different provisions that have a Social Security number provision with them, obviously along the administration's emphasis on immigration and illegal immigrants getting particular benefits out of the tax system. So the Social Security number, which isn't really a new requirement as much, but there is a Social Security number requirement for a qualifying child. Again, math error authority is being expanded for the IRS in order to be able to adjust those returns without 90-day notice going out, much shorter term. But in 2026, child tax credit was supposed to go back to $1,000, and now the non-refundable credit is $2,200 next year, this year and next year. The refundable portion is going to stay at $1,700. It was set to revert back to $1,000. So both the taxpayer and spouse have to have valid Social Security numbers by the due date of the return. And of course, the math error authority around the child doesn't have a Social Security number. They've always had the math error authorities from a statute for name and Social Security number mismatch. The expansion of that is the existence of the Social Security number. which they've quasi-taken because they put it in the e-file specs, and we all have to deal with that on the MEF side of things. Other dependents credit was set to go away. Now it's still going to be around as $500. And now an I-10 is still okay with the other dependents. So our Social Security number requirement is not there for the $500 other dependent. And I think we mentioned the estate and gift tax law here was set to go to $5 million. TCJA took it to $10 million. In 2026, that's going to $15 million after 2025. Our AMT, we saw that higher exemption made permanent. A lot of changes with the mortgage interest deduction. It's set to go to $1 million in 2026, but $750,000 of debt tied to the property that's being charged the mortgage interest. Again, ensure that the property that the deduction is being taken for is actually the property that is securing the particular loan. The casualty loss deductions was basically the miscellaneous itemized deductions that were made permanently suspended with the exception of two things. But the casualty loss deductions, OBBBA did make those limitations to disaster areas permanent 2026, and then later on we'll see that expanded to state declared disaster areas, which will allow governors to have more say in the tax bill. I see the question there about senior deduction being phased out by AGI, and the senior deduction itself, I don't believe, I'll have to check on the answer.
The senior deduction phases out for taxpayers with a modified AGI over $75,000 or $150,000 for joint filers.
We have a lot of different phase-out rules, a lot of different phase-out levels within this bill, and it's $150,000 for married filing joint. Good question. I'll try not to get distracted by the questions because I have a lot of things to cover within this, obviously. So the miscellaneous itemized deductions, as I was talking about, there's a new educator deduction within the regular educator deduction was made permanent. But there's a new, starting in 2025, there's a new itemized deduction for educators that allows them, if they itemize, there's educator expenses are unlimited. Now, there's a 900-hour rule to get a deduction for those expenses starting in 2025, and some expansion of what can be covered by those expenses, but they are included as an itemized deduction and not limited to the $300 per educator on the tax return, $600 total. For itemized deductions, again, the PEAS limitation was set to come back in 2026 instead of the PEAS limitation, which was AGI limitation on the amount of itemized deductions that a taxpayer could take. There's a 2% reduction for taxpayers that hit the 37% tax bracket, which is about 2/37, or about 5.5% of the lesser of the itemized deductions allowable, or the amount of taxable income that are over the 37% bracket. So the phase-out calculation is done after applying all the other limitations, or assault limitation, or casualty loss, or medical expense. All of those limitations come in first. Two things that aren't on here that are getting a lot of press, of course, are the no tax on tips. So employees can deduct for qualified cash tips up to $25,000 on the return. Those are voluntary from 25 to 2028. So this expires beginning in 2029. They don't have to itemize to do it. This phases out also at $150,000 of modified AGI or $300,000 of modified joint. So if you think about the senior deduction, it's 75 for singles, 150 for married filing joint. The cash tips is 150 for singles and 300 for married filing joint. So allocated tips, for example, do not qualify for that deduction. Again, a Social Security number is required. The IRS has given us a list of 8 different categories of job descriptions that potentially would qualify for the tips. Originally, it's just customarily as of the end of last year, as of 12/31/2024, if they customarily received tips. Then they came back out and gave us an additional list of barbering, nail care, spa treatments, customarily and regularly. Again, We expect more guidance around this, but the two things to think about here are how are you going to identify the tips and how are you going to justify that? Because we have a transition year this year, and the IRS has said that any reasonable method that the employee uses and the employer uses to provide those tips will be accepted. We have gotten guidance from the IRS later that indicates that they're going to look at the W-2s to see if there were tips actually reported on the W-2s prior to matching that up with tax returns. I don't see how that's going to occur for the 2025 tax returns, but it is something at least they're sending a warning shot. I think there's a lot of concern about fraud, about who's going to report the tips and how they're going to verify that. Again, we know what the restrictions are. The employers have always put tips in the gross wages on box 1 and then allocated tips, of course, on a different box. Now, next year's W-2 in box 12, tips will be required. Qualifying tips will have a new code. I think it's TPP in box 12. This year, that is not there. And so the employers are required to provide that information to the employee in some fashion. So most commentators that I've talked to, most preparers are going to look to the last pay stub for both this and the overtime deduction. So again, any reasonable method, but I do think we're all going to be concerned about how do we justify or how do we perform some level of diligence against that deduction. So the next item, probably go ahead and move to overtime compensation. So anything over the regular, I'll say anything. There's a little, if you read the FLSA Act, the half portion of time and a half, it's required by the FLSA, and that's also required. You probably pull that off the last pay stub also. Overtime is not something that would normally be reported. But that overtime is also allowed as a deduction this year on the new Schedule 1A that we'll be looking at. I don't think we included that in this presentation, but it will show up as a no tax on overtime. And that amount also has a transition rule for this year where the employers should provide a statement to the employees, but how that amount is calculated, because it goes back to the first of the year, does have transition relief where any reasonable method would be included in will be allowed for this year. But the maximum annual deduction on that is $12,500, $25,000 for joint filers. I'm not going to go into the complexity around the FLSA rules there on because a lot of the questions are around what about double time, what about holiday pay as bonus pay, and if you read the FLSA rules, most of those are around what has to be included in the base rate and what should to calculate the time and a half, not necessarily what is the halftime. And so there's two arguments that could be made from the FLSA rules, which are referenced several times within the Act. There's a required to be paid. That if it's required to be paid, then it's time and a half over 40 hours. If it's required to be included in overtime pay, then that's going to be all premium pay regardless of the hours worked. So that word required could end up, until we get guidance from the IRS on clarification on which required in the FLSA statute they're referring to. And again, that's a general overview. So I'll dive into that on some other webinars that we do a little bit deeper. But that no tax on overtime, again, I think there's a lot of concern around potential fraud around that. And we could see those getting looked at or being asked for more documentation later on in the process. And then, of course, we had the out of left field provision, which is no tax on car loan interest, which I got to tell you, when I first heard that there's no way that's going to happen. Anyone that is loaning for a car is required to give the taxpayer a statement of some kind. This particular year, it's any statement. For any loan obtained after 2024, vehicle used for personal use, they can deduct up to $10,000 a year in interest. I don't know what that calculates to for the cost of a car if you're paying $10,000 in interest, but it does. That one phases out at $100,000 of modified AGI and $200,000 for joint returns. Now, the no tax on car loan interest it has to be qualified interest, which has vehicle weight limits, final assembly limits within the United States. And it is a non-itemizing, which shows up on Schedule 1A. And we'll look at that on the form in just a second. And the IRS is providing transition relief, as I mentioned before, on that. Any statement that's provided to the taxpayer should suffice. And then, of course, probably the one that got the most press was the SALT limitation. So originally it was capped at $10,000. In 2025, that was going back to the old unlimited amount after 2025. So now, after 2024, our SALT deduction is going to $40,000, $40,400 in 2026, and then an additional 1% until 2029. If AGI is over $500,000, it starts to phase out. And then before January 1st of 2030, the cap is reduced by 30% of modified AGI over the threshold. But even if they go over the threshold, so even if their AGI is $1 million, $2 million, $5 million, the SALT limitation based on AGI does not go below $10,000. Okay, let's flip on to the business provisions. I haven't even talked about the premium tax credit changes, but I will throw it in. Next year, any overpayment of the advanced premium tax credit will have to be paid back in full. This year, there are some limitations on it, and one of the big fights going on right now with the shutdown is allowing people over 400% of the federal poverty level to receive an advanced premium tax credit or a premium tax credit at all as they make their health insurance choices, which affects roughly, I think we've seen that premium tax credit. Those that purchase health insurance on the exchange has almost doubled over the last 4 years. So a couple million people that are potentially up in limbo right now on their health insurance, which I'm sure folks are getting calls about today. QBI, 20%, that was made permanent. Was going to expire in 2025. The phase out range is going to increase, from starting in 2026, the phase out range, is going to increase from 50,000 to 75,000 or 150,000 on married filing joint. There's also going to be a new minimum deduction of $400, which is going to be adjusted for inflation, and business income has to be $1,000. So there's going to be a minimum amount of business income of $1,000 to even claim the deduction, and then the minimum deduction is going to be $400. So it can't go below $400. So anybody in that little window is going to get a little bump. 20% of 1,000 is $200. That's going to automatically get rounded up to $400 in 2026. Bonus depreciation, another odd date there, January 19th. What was January 19th?
I believe that's the inauguration.
Inauguration date. So we had assets acquired before January 19th of 2025 have the still phased in percentage of 40%. 2024 assets were at 60%. Anything after January 19th is 100% bonus depreciation, and it's been permanently extended. So you'll have 3 different dates there. You can still elect the 40% for 2025 if you would rather, but assets acquired after January 19th, 2025 qualify for 100% bonus depreciation. R&D expensing, that was in every conversation that was ever had. I think it was one of the original back in the spring. You had child tax credit everybody agreed on, and R&D expensing were 2 of the items everyone was agreeing on. We thought we'd get that in a bill by itself, but it did end up in this bill. And the only odd thing here is between 21 and 2025, taxpayers have until July 4th of next year to elect to go back and take any unamortized amounts that they've been taking on R&D up to this point to go ahead and expense those. There are several changes to the foreign income and GILTA and the base erosion. Not going to get into that in this particular webinar. So and the other things that are in here that we did mention, 1099K, 1099 MIS, 1099 DAs, all of those are going to have an impact on our reporting for this coming year.
Do you want to talk about foundation?
Yeah, go ahead. Yeah, go ahead.
So there's this very useful tool on the Tax Foundation's website to talk about changes in tax liability related to the OB3 or working families tax cuts. So here is just a sample of that profile for two separate taxpayers. Kavya and Nick take the standard deduction and have $5,500 in pre-tax 401k contributions. So you can see with this bill, they have a tax cut of about almost $2,700. And then Amber, single, no children, makes $75,000 a year. Again, has $5,500 of pre-tax 401k contributions, takes the standard deduction, and also earned $10,000 in qualified tips. So this is just sort of a display of how the OB3 may affect your clients. These are two very typical sort of taxpayer profiles here. And then we have the 1040, just very quickly, side by side to compare the 1040 income in this year and the 1040 from last year. Again, this is a draft form from the IRS website. So you can see the form has been expanded pretty heavily for this coming filing season to include all of the new deductions. And then here's also the back of that 1040 form as compared to last year.
So Taylor, if you want to flip back to the previous slide real quick. So I'll point out just a couple things here. You'll see up in the address line to the right, there's a new checkbox. And again, it's showing the priorities of this particular administration. There's a question now on if you're filing a joint return, was it in the United States for more than half of 2025? And then you'll also see on the dependents line underneath our digital assets question, we see as expansion of the information that's showing up on the front of the 1040 around dependents. And then our married filing separate, living apart from the spouse, legally separated, that question is now right underneath the dependents. And you'll also notice there's a lot of check boxes now around retirement plans that none of those rollover amounts are anything new in the tax law. They're just now showing up, our QCDs and our rollovers of IRAs are all showing now on the front of the 1040. And there's other check boxes around capital gains and married filing separate. The other thing I'll point out on page 2 is line 13B. We didn't have Schedule 1A in this particular presentation, but that is where all of those additional deductions for overtime, tips, or senior deduction is not going to show up as a standard deduction. It's going to show up as an additional deduction. So it's an above the line, below the line deduction. Showing up before taxable income, but it's after AGI. The main thing accomplished there by making it after AGI was states that start with AGI and don't follow the tax law will not be affected by those 4 provisions that are showing up on Schedule 1A, which are overtime, tips, standard deduction, and the auto loan interest are the deductions that are going to show up on 1A, and they roll through the 1040 on 13B. 1040 is a very political, if you remember, I even forget which administration it was, it talked about tax simplification, and what they gave us was a postcard, and that's where we got Schedule 1, 2, 3, and 4 is because all the information that needed to be reported cannot be reported on a postcard. But now we're back to a regular 1040. Okay, I'm done.
We have a polling question now.
Okay, this is our second polling question for this webinar. The SALT cap increase was a source of debate during the reconciliation process. What is the new SALT cap for both single filers and married couples filing jointly? And the options are $15,000, $40,000, $30,000, or $55,000. So pick the answer that you think is right and go ahead and hit submit.
Hey, Taylor, I didn't even mention the Trump accounts.
Yes, Trump accounts, there's enough where you could probably do a completely separate webinar on Trump accounts. That is going to be a very interesting addition to this filing season.
But I'll just say this real quickly. It's basically an IRA where, anyone under age 18, if they're a United States citizen, of course, earnings grow tax deferred, but not tax free. So it's not like a Roth. And it's not like a regular IRA where someone gets a deduction for the contribution. The contributions are not deductible again, $5,000. No distributions are allowed before age 18. Employers can contribute up to $2,500 to those accounts. And there's a lot of restrictions around how those accounts are going to be administered. In other words, they can't be leveraged. They have to be invested in index funds and those types of things. For U.S. citizens born between 2025, January 1st, and 2028, the government's going to put $1,000 for each one of those children into this account. And the IRS is going to open that account on behalf of that child with the particular financial institution that they decide to go with. And that's effective next year. However, on this year's tax return, you will see a form to sign beneficiaries or dependents up for that Trump account. We don't have all the details on this yet. In fact, I was on a call just before this with some of our development staff talking about the things we don't know about how that's going to be implemented. As of today, it appears as if signing up for that account is going to be part of the tax return filing process. So once that is released, all of your practices are going to be inundated, I believe, with individuals with a question on how do I get that free $1,000 for my child? And as a result of that, we'll provide more guidance as we get that guidance. Just know that it will be, as of today, it appears to be a separate form that will be filled out and filed with the tax return. And on that form, you will designate who the responsible person is for that account. In other words, who is the adult that's tied to the account and who is the dependent that's tied to the account. And you'll have to answer a series of questions. There will probably be a 7216 attestation or where the taxpayer provides the IRS with 7216 consent to provide that information to a financial institution. All of that to let you know it is not going to be just a one checkbox filing. It is going to be something that all of us are going to have to pay attention to during tax season.
Okay, I'm going to go ahead and show the answer to the polling question, which is $40,000. I'm hoping we had good results there.
It looks like 89% got that right.
Perfect. Okay, so very quickly, with a bill this large, there's obviously going to be some challenges with implementation. First and foremost among these is going to be IRS readiness and administrative barriers. So from the first of this year until the shutdown, due to different cuts and RIFs and the voluntary resignation program, the IRS lost about a quarter of its workforce. Half of the remaining workforce has since been furloughed with the government shutdown. So we are seeing shortages in critical teams at IRS who are in charge of implementing OB3. We are seeing tech modernization gaps that have been a factor at IRS for quite a long time. But of course, all of these reductions in force are pushing that back further. There is a short implementation timeline for many of the provisions that we've discussed today. And there are issues with leadership gaps at IRS. Many executive positions at IRS either have an acting official or no official at all. So we have also seen major turnover in the commissioner position. We have the Treasury Secretary acting as IRS commissioner right now, and a new IRS CEO position that has never existed before. So it's going to be interesting to see how IRS overcomes those barriers in implementing such a large piece of tax legislation. These provisions are very complex. They have complicated rules and phase outs like we've discussed. We obviously have a concern with the risk of misinformation with a bill this large that could impact this many people, particularly with the overtime and tax provisions like we talked about earlier. And even with the Trump accounts, we are not sure what sort of fraud we should anticipate exactly with Trump accounts, but we do anticipate that there will be something because there is that offer of $1,000 from the government directly into the account. So that will be something that we'll continue to watch. And we definitely want to be a part of the solution, not a part of the problem there. So it's important to stay on top of resources as they are released. We are hoping that IRS will be able to provide guidance timely despite the staffing challenges that they are experiencing right now. So I believe we have our next polling question. Rapid fire.
All right, this is polling question number 3. Which of the following is a major challenge the IRS is expected to face in implementing the working families tax cut? And your answer options are limited staffing and outdated systems, compressed timelines for issuing guidance and updates, administrative strain from simultaneous program rollouts, or all of the above. And click the answer you think is most appropriate and then click submit. And even if you weren't paying attention, I have a feeling everybody's going to know the answer to this one. All right, and we are approaching 100% of people getting the right answer.
I'll go ahead and show it then. Obviously, all of the above there. So we are entering into an interesting filing season, to say the least. And our last section, very quickly, we'll go through some of the policy and political implications that we can expect to see from this bill. So again, impact on the 2026 filing season. This will be a proving ground. Taxpayers may experience more complexity at first, while practitioners such as yourselves have to quickly adapt to new forms, rules, and guidance. And the season's success will strongly shape perceptions of the bill, which is obviously important to the people who wrote it, right? Tax preparers will have to do their best to perform due diligence when many of the new individual deductions like tips and overtime may not have been reported regularly throughout the year. That's why IRS is offering that transition assistance that we have discussed several times so far. And these individual deductions represent heavy administrative lifts and significant Internal Revenue Code changes, despite the fact that they're only effective in tax years 2025 to 2028. Their future beyond 2028 is uncertain, but I think it's safe to assume that if they happen to be popular among the taxpaying population, that they will be extended simply because it is such a heavy lift to get them implemented. The taxpayer experience is likely to be a little bit different this season. The new Social Security number requirements to file for certain deductions and credits will be different than taxpayers might be used to. The new rules about filing jointly if married to claim certain deductions may take some taxpayers by surprise if they're not used to filing jointly. We definitely want to prepare people for longer wait times on IRS phone lines. Those have already been predicted for the coming season after those major workforce reductions and furloughs at IRS. The agency is still struggling to fill and train customer service positions for the coming season. We also have a paper check phase out. There was an executive order back in March that is meant to phase out federal payments via paper check. So that means that direct deposit information is being added to many new forms. Details about the implementation of the order are expected soon, but this could be a difficult transition for taxpayers who are unbanked or wary of providing bank account information to the IRS. And then, of course, we have those state tax issues. I read today in states where there is an election, I believe there's something around 900 tax provisions on different ballots around the country today, about $3 billion in equivalent value for all the tax provisions that are on ballots around the country. So changes in OB3, particularly those related to healthcare, will have impacts on state budgets. Those state and local tax provisions that people are voting on today will have impacts on the filing experience in those states. And then also there's always that complicated debate on conforming versus not conforming to the federal tax code. So we are also watching.
Sorry, on the
Yeah, no,
on the paper check thing.
Mhm.
You know, I've seen some commentators say they expect an IRS reject if someone has a refund and they don't include direct deposit information. Currently, that is not the case. There will be an alert that'll be issued, and hopefully that'll come back to the preparers to let them know that happened. Tax software, I know that Drake will do that also. We'll give you an alert. Also, and the taxpayer has opted out of direct deposit information. So you can just expect a few more administrative hurdles if someone definitely wants to get a paper check, and also a 90-day hold probably on getting, I think it's 90 days, might be 60, hold on releasing the refund. So it will be a delayed refund, but that'll be part of the alert process if the taxpayer definitely wants to get a paper check.
Yes, I believe it's a 6-week hold. If you are refusing direct deposit and want a paper check, it can be up to 6 weeks before that refund is processed. Why don't you talk about some implications for tax professionals, John?
Well, obviously having the correct information, which I just did not give you correct information on the whole period there, having the correct information at your fingertips is going to be critical to you. So I think having reputable sources for that, using irs.gov, using something other than Google. I've seen a lot of misinformation out there. And then probably the biggest thing to impact that we kind of touched on before was the due diligence process. When the IRS gives transition relief and they make it so ambiguous that it doesn't really give us a lot of cover, they try to bring flexibility to the no tax on overtime, no tax on tips, all those things. But it also puts us in limbo land where how do we check a box that says I did this? So I think to a large degree, we're going to have to come up with our own best practice. So for example, for overtime, I would think a best practice would be always examine the last pay stub and identify the overtime that's reported to the employee there. And if that were to be revised or changed or additional information were to come in from the employer, that's the amount that would go on the tax return, not just because the taxpayer tells us that they got paid all tips, they got paid all overtime, which overtime would not be possible. Could be possible to get all tips, but it would be a rare occurrence, I would think. And also just ensure that as you're looking at that reputable sources for the information that you get, make sure you sign up for those alerts. I think going to the IRS website and signing up for their professional MEF, not MEF alerts, but their e-filing alerts and their tax preparer alerts would be critical this year, especially. And, you know, we're about to hit tax planning season, and we probably already are in tax planning season as taxpayers decide how they're going to navigate charitable contribution rules, how we're going to navigate SALT. Do we want to accelerate those or decelerate those particular payments and contributions? So it's going to be a lot of stuff flying around. So having a reputable place to go to get that information is going to be critical, and going ahead and putting your process in place for your due diligence on these deductions is going to be critical too. So I would go ahead and prep for that now. And then of course, preparing for delays. We don't know when tax season is going to start, and we don't know if it's going to be fully operational. We could see a partial implementation of tax season like we've seen in prior years, where particular credits or particular deductions are not allowed in early filings. We have no indication that's the case, but we are preparing for it internally, and I would suggest you start prepping your clients if they think of when they can expect their refunds. We just don't know yet. So
we have another polling question before we get into our last few minutes of discussion.
Okay, this is polling question number 4. The deductions for tip income, overtime income, and vehicle loan interest all have the same effective date. For which tax years do these deductions apply? And your options are 2025 through 2028, 2025 through 2035, 2026 through 2030, or they are made permanent beginning in 2025. So pick the answer you think is right. While you're doing that, I just want to remind you, we're going to have an opportunity to answer, for our speakers to answer some questions here in a few minutes. And then we're hoping that you will have time to hang around a little bit extra because Drake would like to provide you with a 15-minute demo of their product after this session ends. The 15-minute demo does not have anything to do with your eligibility for continuing education credit, but it's going to be there, and we hope you'll want to stick around. Okay, back to you guys.
All right, are we ready to show the answer?
I think we are, yes.
Okay. So the correct answer there is A. Those are those provisions that are only effective 2025 to 2028. So the last thing we'll discuss, because it is quite topical today, is the government shutdown. We are at day 35 today, so we are officially tied with the partial government shutdown that occurred in, I think, 2018 or 2019 for the longest shutdown in U.S. history. So we are hoping to see some movement this week in the Senate on the House-passed funding patch that would last through November 21st, but it is those talks are ongoing and the situation is quite fragile at this point. So the central issue, of course, is those expiring ACA enhanced premium tax credits that lower or subsidize monthly health insurance premiums for individuals and families who buy their health insurance through the ACA marketplace. The enhanced credits are expiring, and this will result in significant premium increases for millions who do shop the marketplace for their health care plans. So the Republicans want to pass a clean funding patch and negotiate a deal on extending those enhanced credits after the government is funded, where Democrats are trying to tie government funding to an extension of those credits. Shutdowns end when someone blinks first. Right now, it's not clear who will blink first. We, again, have seen half of the IRS be furloughed over this shutdown. People, especially people with federal government jobs, are really having a tough time. Air travel is going to get increasingly dicey, which is not great considering how close we are to Thanksgiving. And then, of course, we saw those SNAP benefits run out of funding over the weekend. They will be partially funded starting this week. So we'll see what happens, but my fingers are certainly crossed that we see some resolution to this week. And now, if there are any questions, John, that you see that you'd like to answer?
I have a question, and
Sure.
maybe you answered it and I missed it. Is today's elections, are they going to impact the shutdown, or either side's willingness to compromise?
I do believe they are a pretty significant bellwether for which side will blink first. I think if we see big Democratic victories in those gubernatorial races in New Jersey and Virginia, Democrats might be galvanized and believe that people are falling into their camp with regard to the healthcare argument. But if we see big Republican victories, they may dig in a little heavier on their desire to just pass a clean funding bill before they negotiate on healthcare. So it will definitely be interesting to see how they shake
I think we're probably out of time here because I've made us go 10 minutes over. I see you kind of saying yes, it was you. Not that unusual. So I'm kind of working through the questions that are left in the chat here, but I don't have any other questions.
Okay, I'm going to hop in here. I want to thank you, John and Taylor, for an incredibly excellent presentation with lots and lots of good information. We hope that you guys who are attending enjoyed this, and a reminder, you can download the slides from the event resources option on your screen. I want to thank all of you for your time, all of you, both presenters and attendees, for sharing your time with us today. We want to thank Drake for making this event possible and enabling us to offer free continuing education credits to each attendee. As a reminder, we're also able to offer IRS CE credit for this event. The CPE credits or certificates will be arriving in your email this afternoon, so look for a message from CPA Practice Advisor. I'll be calling in or sending in the CE credits directly to the IRS within the next week. If you have any questions about CPE or CE credit, you can contact me directly at gperry, Gperry, at cpapracticeadvisor.com. Also, if others are watching this event with you at the same computer and they require credit, you can email me their names and email addresses, and if they need CE credit, their PTIN numbers at gperry at cpapracticeadvisor.com. And now we are going to turn this over briefly to Jeremy Duke from Drake, who's going to provide a brief 15-minute demo about Drake software. And at the very end of that, if you're still with us, there will be a brief survey. We'd love to have you stay on and answer that just about our CPE series, webinar series. But now, Jerry, the floor is yours.
Well, thank you. And as she said, my name is Jeremy Duke. I'm an account executive here in the sales department at Drake Software. I want to thank each of you for staying around as I'll give you a brief overview of Drake Software. I was told at 3:15 this starts hard. I spent 25 years in radio, and a hard out means end of broadcast. So we're going to try to wrap this up as quick as possible. Sit back, buckle up, and hang on. Here we go. Whether you're already a Drake user or you're exploring new software solutions, I appreciate your time today. I like to put Drake software into two main buckets: productivity and accuracy. Those two words summarize what Drake is built for: helping you work faster, file accurately, and ultimately increase your revenue, right? I work with thousands of tax professionals every year to help them determine whether Drake is a good fit or not, and then help them get started smoothly. Drake Tax is built for tax pros who want to work faster, file accurately, and get real support without hidden costs or limited features. Over the years, Drake has become truly a one-stop shop for the modern tax office. We have tax software for fast and accurate returns. We have accounting software for bookkeeping and payroll. We have client management tools to stay organized. We have secure portal for secure document sharing. We also have integrated payments for convenience and speed. All of this is backed by our award-winning support team, real people who actually pick up the phone. During this last tax season, January through April 15th, we had an average hold time to reach a live support agent of just 33 seconds. That's the kind of reliability that can make all the difference during your tax season, right? So whether you're needing a high volume or a low volume solution for your software, or you prefer a desktop or a web-based solution, Drake has an option for every workflow. So let's do this. I'm going to go ahead and jump into the tax desktop program, because we do have a desktop program and a web-based platform, and I'm going to show you both as briefly as I can here in our time. So the desktop, I'm now showing it. It's on my screen. You should be able to see that as well. This home screen can be very customized in so many ways. You can do so many things with this, whether you want to color code it, you want to change the statuses, you want to add ways that they've paid you or the ways that they've heard about you. However you need to do it, you can move this around, and it's unique to the logged in preparer. So without going into a lot of in-depthness here, because we could spend a whole hour just talking about all the features here on the home screen, we're going to jump into a return that I've already got prepared so you can see what data entry looks like, and we can talk about some of its features and functionalities. So as you can see, Drake software is a menu-driven software. You can see that right across the top. If you were looking at a 1040 return, this is a 1040 data entry for a 1040 return, you could see that the general screen here are the most common screens you're going to be using. But the tabs across the top, income, adjustment, credits, taxes, healthcare, that all follows the flow of the 1040. So intuitively, it flows. I mentioned earlier that Drake is designed for accuracy and productivity. There's several ways that Drake can really help you become productive. Hotkeys are one of the ways. And when you're in data entry mode, right here, you have this little selector field at the bottom. Your cursor's always flashing. You can type in what you're looking for, and this is a robust search. I just typed in the word health. Everything that's related to health in this return is now on my screen, and I can click it and enter into that screen. It doesn't just work with subjects or titles for forms. It also looks for items if you're looking for items. In this return, I have a couple of desks. I have 2 desks, and I have an iMac desktop computer because desk is in sequence. That is now something that can be searched. You can just double click on it. You can go into your 4562, make any adjustments. Maybe you've sold it down here in the bottom. Maybe you have a group sale, whatever the case may be. This search also works with numbers. You can type numbers and it'll find numbers in sequence. For example, I typed in 125. Everything with a sequence of 125 is now on my screen, and I can simply load the screen. As I said, it's designed to be fast, designed to be productive. You can just type in the letter C for like the Schedule C, for example, and I'm on the Schedule C now. Drake has built support at your fingertips. Every one of these data entry fields, you can press the F1 key, and if you don't remember that, you can always right-click to get the menu, and you'll see the hotkeys listed on the menu. Help for this field, F1. It tells me what goes in this field. Every one of these data entry screens, F1 will tell you what goes in them. There are lots of different things here. You'll see video tips. You'll see all sorts of different things. When you mouse over the top, you can have prior year fields that you used in the prior year. Maybe you want to see the prior year data. You can get a read-only view. Lots of options here. Lots of ways that you can also set yourself up for accuracy. Flag a field for review. At any point in time when you're doing data entry, you can hit the calculate button to get a quick diagnostic and see where this return is at. I've got red X's here telling me that my electronic filing status is not acceptable. On my diagnostic message here, it tells me there's an unverified field on a federal screen. So it won't let me e-file this return because of this right here. It's in blue, so I can double click it like a hyperlink. It takes me right to the item that needs to be looked at, evaluated, and either changed or just go ahead and remove the flag if it's correct. At any point in time, you can also go to the view mode of this return and see what this return looks like. I've removed that diagnostic error. Now I have green checks for e-filing. We're going to continue on to the view mode. In the view mode, I've got a tree view along the left-hand side here of all the forms, schedules, worksheets that have been generated for this return. And as you can see, these poor folks, I've done a lot of things for them. This is my go-to return. So I'm glad they're made up because they might be upset with some of the things we've done to them. So as you can see right here on the list, I've got Form 1040. I've got a little green check next to it. I'm going to click on that real quick. We'll look at the 1040 return. As I'm mousing down, you can see little gray checks on the right-hand side. We call those double checks. So if you click it one time, it goes green. Click it a second time, it goes red. You can also see on the form or the tree view over here that I have a red flag as well. So you can also click on this, right-click. If review input sources, link backs are available, you can select that. And what it's going to do, it's going to pull up all of the places in the return from data entry that contribute to this line. You can then simply double-click on that line. It takes you right to that entry point on data entry. So maybe you're looking at a form and you're like, I'm not sure where to enter this in Drake. That's one of the ways you can also find out. Just kind of do like a little reverse lookup, go to the view mode, right click on it, and go to review input source link backs. Easy to do review process here in Drake. And as long as that is there, you can select on it, go to your items, wherever it may be. All right, so now we're back to data entry real quick. I want to show you a couple things that are included with the software. Then we're going to move over into the desktop or to the Drake Tax Online version. We include with this a split optimizer. This splits the return for you. So if you're doing a joint return, it'll give you a way to optimize that. It'll give you a report that tells you which way is the best way to file this. And if you want to go with a split return, it automatically splits it for you. You can just simply click on the split return and enter into that. The tax planner, this is an incredible little feature that's included for free. If you do tax planning, here's a great solution for you. If you want to add it as a revenue stream, it's included for free. You can create an unlimited amount of scenarios for current year and for next year based off your data entry for the return. We already have the one big beautiful bill, or the OBBBA or whatever you're wanting to call it nowadays. It's already available in the 2024 software. You can create the unlimited amount of scenarios. Then you can come back and you can compare 3 of them against the original and have a side-by-side report. When you're ready to go back to the original return, go back to data entry, just double click on the original return and you're back in there. There's lots more I could show you there, but I want to move over into the desktop or to the Drake Tax Online. If you want to know more about the desktop version, I'll give you a way to contact us here at the sales department at Drake, and we can schedule a time to do a demonstration of that with you. Let's move over to the Drake Tax Online real quick, and I'm going to move this over to the screen here. So this is our hub. When you create an account with Drake, you get the hub, and this is one of the places that you'll be able to manage a lot of different functionalities within your work practice, including going to the support site. But let's go to the apps, and we're going to go to the Drake Tax Online. Now, Drake Tax Online, we've had a web-based version since 2008 called Web 1040. This year, we've rolled it out, having the capability of doing corporate returns as well within the return, or within the web-based platform. This is a trial version of the software. So at this point in time, I only have 3 types of returns that I can do. So if I'm creating a new return here in the Drake Tax Online, as we call it DTO, I can select 1120S or 1065 or 1040. Those can all be done completely here in the web-based platform. If you wanted to do a 1041, a 1120, a 990, you can start them here. And what it will do is it will push it to a desktop version of Drake Tax for you to do data entry. When you're done with that data entry, you can save it and sync it back to the web-based platform here for e-filing. So let's go ahead and go into a return that I've already got so you can see some data entry. If I wanted to go into the desktop version for data entry, I could click this little button right here. But here's where the data entry does look different than our desktop program. So I would go down the page, I would enter in my information, kind of like an interview style, save and continue. It does a quick diagnostics before moving on. At this point, I can go into the guided workflow, or if I wanted to, I can go where I would like to just by clicking into the selection form here, or the selector field here. If I want to see the forms and what their codes are, I can choose them from this little list right here. It opens a PDF. And so I can search for whatever I'm looking for and go directly to that. As you can see, as I go through each page, I just hit next. Next, if I want to stay in a data entry view of just going down the pages with a guided workflow. You can do a quick calculation, see where your return's at, estimated refund after fees. You can also review the forms. And there are other tools here. If you want to take Drake Pay, if you want to send it through a portal, lots of options there. All right. So I've got 1 minute left, so I want to try to wrap this up as quickly as I can. Whether you're looking to streamline operations or grow your practice, Drake software has a solution for you. We're here to help you work faster, more accurately, and get real support behind you. If you'd like to learn more or schedule a time for a more personalized walkthrough demonstration, contact me in the sales department, 800-890-9500. My extension is 4480, or ask for Jeremy Duke. I'm the only Jeremy, I'm the only Duke in the sales department. Give me a call. I'd be happy to walk through you, a Zoom link with you, and get through the software, answer your questions, and see if Drake's a good fit for you. So my time now says 3:15, and that means my time is up. So I'm going to turn it over to our host, and thank you so much for joining me today.
Thank you, Jeremy, and thank you all for sticking around for the demo. Again, Jeremy's phone number is 800-890-9500, extension 4480, or ask for Jeremy Duke. We want to thank you all very much for being with us today, and a brief survey is going to pop up on the screen in just a moment, so please take a moment to fill that out, and our audio will end now.
Thank you so much for joining me today.